Quick video on flow. The question I've been getting over the years is, when you see the flow, is this what you act on? Like, is that the strike? Is that the play? No, not for me. I don't stare at the flow. I don't wait for the flow in every name. I just notice it, and it's just a confirming thing. It's just a kind of like an extra layer of buying that's helping propel the stock, but it's all based on technical analysis. And what I mean by that is I'm tracking plays based on technical analysis, chart setups that I look for, that I like to play. And then, almost like as if it's magic, you start to see flow when you're on these nice technical setups. And it's not magic, it's because, big shock, the guys who are playing it, or the gals, they're basing it on technical analysis too. Really is that simple. Setups are there, and again, they even sometimes they're even way late on the setup, so you can actually be much earlier on it before they start confirming with money, and vice versa. If it's a name that they really want to get into, especially if it comes down to certain levels, you'll see them get into it even earlier than the move fully revealing itself. But most of the flow is played because of the technical setup in the charts, and I'll explain to you a few things about that. And then I'll talk about the flip side, which is maybe 5% of the flow or less that's not based fully on a technical setup available, and they're trying to play for a certain type of news or event. So with the flow that I consider quality flow based on technical setup that is sound and the opportunity that presents, you look at it a few different ways. The best type of flow is something that's out the money, but not excessively out of the money. So if it's at $100, you have a play maybe for 2-3 months where it is now, maybe they're playing for 120 strikes, so a 20% move. That's pretty huge. That's pretty decent as far as flow is concerned. But I would say even safer than that is something that's maybe in that 10% range. So if it's 100, they're playing for $110, 2-3 months out, that's a sweet spot. It's something that can propel the move, and that can bring on more momentum and more buyers, and that could push the stock higher. When you see flow that, let's say for that same stock that's $100, and you see flow that's saying 220, 230 for 6 months out, now you're talking about something that you have to look at as excessive. Is there a possibility that this company can double? Yeah, definitely, depending on what it is. But most companies are not just looking to double in 6 months. That would have to be something, maybe getting into a new cycle of the market, perhaps. Very unlikely though, just especially kind of how we're looking at things from the perspective of where we are right now. That's not something you would look at and say, oh, that's going to play out. That can be part of a larger structured play. We don't have all the information for it. Maybe it's going to play at IV. I'm not certain. I could never be certain as to the motives for what someone is playing or buying. But the reality is, you look at something like that and you say, okay, it's good because it's more momentum in the name. You don't know what it is, and you still make your play based on sound technicals, where you have your targets drawn on your chart based on the realities of the resistances that you see and what makes sense as far as a timeline to hit certain prices. So you see that type of flow, I call it silly flow. Sometimes it means there's going to be a pullback coming if the name is run too hot when I see those types. But other times you look at it and you say, okay, it's interesting, but don't look at the strike, disregard the strike. It likely doesn't matter. So quality flow, 10 to 20% out of the money is good, at the money is great, and you always want to see them kind of keeping it just ahead of time. Weeklies are nice for momentum in the week, but you want to see more to the move than just in the next week or two. You want to see flow that that provides you the landscape for like a month or two out. That's when you know you can get a real good move underway. Now the other flow, the speculative flow, this is where I will talk about why they do it. They know something. Most of the time someone knows something, or there's news coming out, so someone's able to make an educated gamble on which company might benefit from a certain legislation or law change, whatever. When they play random flow on a chart that has been essentially weak or dead or very low volume, that's when you look at that and say, okay, someone's taking a shot in the dark, someone's taking a gamble. Likely there's going to be pending news coming on this name, and you'll see it moved. It's a high risk play. If you like that kind of thing, I know people who play those, and sometimes they go into nothing. You just a gamble that's wasted. But you do play a few of them, and you tag along that spec flow, and sometimes you do get rewarded. Again, I think the technical setups are the way to go. The other ones are more just for fun. So even if you do play them small and have very, very low expectations. But those are the two types. So most of the flow, based on technical setups, based on what we do every day when we're looking at the charts and putting the work in, that's just a result of other people also seeing what we are seeing. That's it. Nothing magical about it. And it does give you more confidence. And this is why I look at names that some of them do move more when there's more volume. So more attention, more volume, more call flow, they push that particular name higher. Just matter of supply and demand. All right? I hope that helps.